JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 17th of August 2020. So welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff basically. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com. and click on the research tab right there on the top, so it'll take you to this page, which I believe you can find it useful. Now, jumping into another interesting thing here, which I haven't looked at for quite a while. So basically, the situation with the coronavirus, we had a surge during the weekend, and if according to this data we beat the record, we created a new high. However, if we look at some other sources, and let me just quickly double check, so it seems that no, they have not reached a new all-time high. So basically that's where, this is where the difficulty in this and trying to kind of at least maybe analyze the situation around the coronavirus. So for now, basically it's a little bit impossible. And the only thing we can do is just go just day by day, see what's happening, and if the situation is just not getting worse, and that's it. So but for now, of course, the number continues to rise. We have climbed above that 21 million, and we're actually getting very close to that 22 million mark. US, Brazil and India are leading the way in terms of infections, and then followed followed by Russia, South Africa and Peru. But in terms of deaths, also similar story. The US and Brazil are taking first and second place, but Mexico here, as you can see, it kind of managed to overcome India, which is in third place with the total amount of infections. But of course, as always, we question the reliability of this data. So again, for now we can go only from what we have. So the most important, guys, just stay safe yourselves. Now, jumping into the markets. Now, the first one I want to touch on here is Nikkei 225. The index declined a little bit. It dropped back below the highest point of June here, which is around the 23,185. So it's slightly in the red today. However, it remains above this downside line. So in a way, even if it drifts a little bit back down here, still there is a chance for Nikkei to kind of rebound somewhere from around this area, and or even the 21-day EMA, and then make its way up again. So that's why for now, guys, be very careful with this one. Yes, it is declining right now. However, we could class this decline as a temporary correction before another possible move higher. However, if this downside line gets broken and the price starts falling below the 21-day EMA, now this is where we will start looking at some lower levels, potentially maybe going all the way here towards the 100 EMA or even the 200-day EMA. But again, and that would be roughly around the maybe just slightly below that psychological 22,000, near the 21,900 zone. So keep your eyes on that. But for now, although we are seeing a little bit of a move here to the downside, still not all is lost for the bulls. Now jumping into Shanghai Composite, and now this one has rallied nicely to the upside today, and well, the Chinese markets kind of showed a good rally, and yep, for now, basically, guys, everything is looking quite positive. This is what I was talking about last week, basically, that and look at how well this all worked out, because what I was saying last week was that if this 21-day EMA together with the 3,307 zone continue to provide decent support, and we don't see a daily close below that, then yep, there is still a good chance for this one to move higher. And yep, it, as you can see, it reached, well, almost reached our target, probably, but to be honest, I will take that because it's just a few pips here, a few points away from hitting the 3,457 level, which is the highest point of July, near the highest point of July. So the index managed to reach that area today. However, don't get me wrong, we still have around 50 minutes left of trading here in this index, so we'll keep a close eye on this barrier, because just it would be quite interesting to see if this barrier here would get overcome here, and we would get a nice overshoot, or even if we would get a nice daily close above that area, then yep, this is where it could become very interesting again. So however, what I want to kind of keep you in let you know as well, so that you would keep that in the back of your heads, is that let's see if this barrier actually breaks. But if it doesn't break, we may see a bit of a correction here to the downside here, and potentially maybe we could see this range kind of forming nicely here, and we could then see a drop of the price lower. But again, we'll go step by step. Of course, it would be quite interesting to see if this gets a hold up here and then reverses south and moves all the way towards the lower side of this range. Then yes, then it would be, like I said, it would be quite interesting. Probably the bears would be very happy in seeing something like that. So however, again, all eyes right now are on this level. As you can see, it's currently getting a hold up here, but as I said before, we do have still around 50 minutes left of trading. Now, German DAX, and this is what I was talking about yesterday, not yesterday, but last week, that first of all, the fact that we managed to break above the 12,913 zone, that yep, that's great, that's wonderful. On Friday, you can see that the index drifted lower, broke below this area, and but still the bulls managed to lift it up again, and yep, that's the kind of, and then the index also rebounded from this 21-day EMA. So basically, in a way, everything's still kind of looking quite positive. In a way, we could see this one pushing up again if it continues to balance above the 21-day EMA. Looking at the cash index and where the index is currently trading at, and it's currently balancing at around 12,868.70 zone. So that means that we will be having a opening gap here to the downside. Basically, we'll see an open below this 12,913 zone. That's, by the way, the highest point of June, but it will still be above this 21-day EMA, which currently is roughly around the 12,773 mark. So but of course, if that gets broken, if this 12,773 territory gets broken and we see a slide here, then, well, I mean, this could drift, this could lead to a bit of a larger correction to the, not, I wouldn't say maybe correction, but a slightly larger move here in the short run. But if, like I said, the 21-day EMA continues to provide support, then let's see if we can actually go ahead and test the highest point of July near the 13,314 mark. So keep your eyes on that one, guys. Now jumping into another index, and this one is a dollar index and DXY, and this one is drifting a little bit here to the downside. So after last week's failure to close and stay above the 93.81 zone, you can see that the index is now drifting lower towards this lower side of the range, because at the moment the index here is forming a range. So in other words, as long as it stays between these levels, we will remain neutral. If this lower bound of the range here near the 92.55 level gets broken and we see a daily close, not only that we see a break, but we'll also see a daily close, then yes, further declines could be possible, guys. And well, it is could be opening the door towards, first of all, the lowest point of actually the low of 15th of May, if I'm not mistaken here. Let me just quickly double check. No, that's going to be the 14th. Yes, the 14th of May of 2018. That's going to be our next target, 92.24. Or it could go all the way here towards this little inside swing high here of let me just quickly capture that one, guys. Not this one, but this one right here. So and that's around 90.93 level. So again, before kind of considering these levels outside of this range, we need to get a break of one of the sides of that range. So again, for now, like I said, we're a little bit on the neutral side. Jumping into gold, and this is what I was talking about last week. So everything's for now working out nicely. Last week, if you haven't seen my videos, I was talking about this 1940 level, because what I was saying, that if we get a nice move back above the 1940 zone, we get a nice daily close as well above that, this would also close the price above the 21-day EMA, and kind of the bulls would have a good chance to keep driving this one to the upside. So as you can see, on the 14th of August here, we had a bit of a decline, and it did drop below this 1940 level initially, but got held here near this 21-day EMA, and the bulls managed to keep the price above this 1940 zone. So today we saw another kind of false breakout here. Again, it's a false breakout for now because the day is not, well, it just started. So so yeah, let's see if the bulls can actually push this one higher. Initially my target is the 1981 zone, and then of course that psychological 2000 territory, but slightly above that we do have that inside swing low here of the 7th of August near the 2015 mark, so approximately around there. In terms of the downside, in order to consider lower levels, we need a drop. We need a drop somewhere, and let me just quickly grab this line right here. Probably no, it's gonna be right here, somewhere around here. So basically we need to drop below the 1863 territory marked by the low of last week, and at the same time, if we see a drop below that level, this would mean that this upside support line taken from the low of the 20th of March has been broken, and yep, lower levels could be met, because this could lead to a change of direction, short-term direction, but nevertheless a direction. Now Brent oil. To be honest, I'm not going to spend too much time on this one. Still, the same analysis remains as the one I've mentioned on Thursday. I can see some comments here in the chat. Thanks. You're welcome, guys. I hope I hope you like it. Now, like I said, coming back to the to Brent. Again, for now, it's just the same kind of story. The price is still stuck between the 21-day EMA and the 200-day EMA. We cannot really do much here. We're waiting for that nice pop here, either above this 200-day EMA, and also we need to see a nice daily close above that in order to get comfortable with further advances to the upside. But in terms of the downside, preferably a nice daily close below the 21-day EMA could do the trick for more sellers, at least for a little bit, because again, we do have a bunch of good areas of support here. The first one we would watch somewhere around here, the low of the 30th of July, and that's around the 44.30 zone. So long story short, guys, basically we need to see a clear breakthrough one of these EMAs. Either we need to see a nice break and a daily close above the 200-day EMA, or we need to see a nice drop below the 21-day EMA here. And yep, like I said, then we could consider the next directional move. Now jumping into Bitcoin very quickly. Bitcoin is moving away higher nicely, moving away from this area, this breakout zone that I've talked about previously. Now, again, it's currently stuck near this 12,097 level, which is marked by the highest point of August, which, or should I say, the current highest point of August, because the month is not finished yet. So in a way, we could aim for some higher levels. However, let's be on the safe side, and let's wait for a break of this 12,097 zone, and then yes, we could consider a further move higher. We could aim for the 12,325 zone marked by the highest point of August of 2019, and then we would take it from there if the price continues to rally above that. But first, of course, this 12,097 territory, which is the current highest point of August, so we need to see a break and a daily close above that in order to aim for some further upside. In terms of the downside, looking at this picture here, looking at this daily chart, well, in a way, from the short-term perspective, keep your eyes on the 21-day EMA, because so far that's kind of providing good support. Yeah, to be honest, I mean, a drop below the 11,100 zone maybe could do more damage here for the bulls. Could make a few more bears happier if we see a nice price drop below the 11,100 zone. Now, jumping into a few pairs, AUDJPY here. The pair, as you can see, is forming a very nice technical setup here. We are having a nice ascending triangle pattern, so that's all kind of great news. We can see that yes, there is a chance for this one to push further north. However, of course, as always, although these patterns tend to be quite bullish, still we cannot really do anything until we get that break here above this 76.80 zone. Let's probably round it up a little bit here. So 76.80, that's we need to see a break above that. We need to see also the daily candle remaining above that area as well, and then we could consider higher areas. For now, we cannot really do much here, and is basically the pair is stuck. We did get some data today from Japan. We did have the Japanese GDP figures for Q-on-Q and year-on-year, on a Q-on-Q and year-on-year basis. Both came out as a slight disappointment from the previous, sorry, not the previous, but from the forecast, but is a huge disappointment if we compare it to the previous figures. So so here basically the problem with that is that it's not really showing good progress in the Japanese economy. Most likely, this is why Nikkei is slightly in the red today. It's affecting, of course, the Japanese yen. However, the fact that the bad data is kind of more pushing towards a risk-off environment, but and this is why the yen is kind of still is on the stronger side, although probably some would expect the yen to weaken. But for now, like I said, for now this is the game plan. This is the technical picture on the AUDJPY, and probably, like I said, let's stick to this idea that if we get a nice strong move above the 76.80 zone, then yes, higher levels could be met. But if we get a break of this upside line and a drop below the 76.44 zone, then yep, we would consider further declines here, at least towards the 72.53 level, somewhere around here, marked by the low of the 12th of June. Quick update on US dollar against Japanese yen here, also unchanged for today. Although on Friday we saw a bit of a decline here, however, the pair still remains above the 21-day EMA, so still a good sign. Even if it drifts below that 21-day EMA, if it manages to remain above this 106 territory, 106 territory right here, then yep, still not all is lost for the bulls, and we could see the pair climbing north, but only up until this downside line taken from the high of the 24th of March. So this this downside line could provide resistance, and that's why for now, even if we see a move higher here, this could be seen as a temporary correction before another possible move lower. Of course, in the scenario if that downside line stays intact. Now jumping into GBP, GBPCAD, I've looked at this one last week, and I was telling you guys to keep a close eye on this possible idea of a falling wedge here. So yep, on Friday we had a nice reversal, a sharp reversal to the upside. However, the pair failed to move above this downside line taken from the high of the 31st of July. On the other hand, it's also the upper side of the falling wedge, which tends to be a bullish pattern. However, we cannot really talk about any bullishness here until we get, well, at least a push above Friday's high here, which is around the 1.7396 level. A nice good push above that, yep, could open the door towards slightly higher levels. We'll go step by step on this one, of course, but for now, given that this upper side of the falling wedge still is kind of holding the rate from moving higher, we're not excluding the possibility of a move here towards this upside support line taken from the low of the 1st of July. So keep your eyes on that one, guys. And like I said, if this upside line gets broken, now this is where, yep, lower levels could be met, but we'll get to that point. For now, it's very close to this upper side of the falling wedge, so let's see if it can continue to hold. If it cannot, then we need to see a nice daily candle kind of remaining above this 1.7396 level before examining higher areas. And finally, EURUSD. So here I talked about this one a lot last week. I was telling you guys to keep a close eye on this little range here. As you can see, the pair has rebounded from the lower side of the range here and is now pushing higher. What also I was saying to you guys last week was that if by any chance this pair fails to get closer to this 1.1909 level here, well, I mean, this could maybe lead to a bit of a reversal here, and in that scenario, if the 1.1725 level gets broken, we will get ourselves a very nice head and shoulders pattern. So again, for now, we're not really talking about that yet, but like I said, if let's say the pair right now continues to balance somewhere around here, fails to move towards this 1.1909 territory, then yes, like I said, we could see a bit of a decline here, and the most important for us level for now will be that 1.1725 zone, which could be that neckline of a potential head and shoulders pattern. But again, this is an idea for now. Probably this is going to be our secondary idea, because the main idea for now is that yes, the pair is traveling higher. We are kind of aiming for this 1.1909. However, if you want to be a little bit more on the cautious side, wait for a nice drive here above this 1.1909 territory, and if we see the daily candle remaining above this area, then yes, this would confirm a forthcoming higher high, and well, it could open the door towards that psychological 120 zone. So that probably a lot of people are now waiting for. But again, we need that confirmation break above the 1.1909 level first. So guys, I really hope you found it useful, and thank you very much for watching and listening. If you want to catch my video later on, my traders tea time, as always, around 13:15 GMT, we'll have a look at some of these instruments, some new ones, and as always, we'll take it from there. But I hope you guys have a wonderful trading day. See you later, guys, and stay safe. Thank you very much, and bye-bye.